Gentlemen, you both have buys on this stock, and there was some interesting commentary from Snap about how they're expecting lower user growth in the third quarter, and they're also anticipating there will be significant revenue headwinds, even though the first 19 days of the quarter, they showed 32% revenue growth. So, John, tell me, why are you so bullish?
Well, I'm bullish because of the long-term story, and I think that the underlying trends are still intact. On the short term, it sounds like the third quarter will have some complications. We're not exactly sure how much sports we'll have. Back to school may be limited in parts of the country. Feature films won't be launching like they normally do. And those are big areas of brand advertising spend that Snap and other digital media players benefit from in the short term. But in the long term, the direct response budgets remained very sticky, even during last quarter, which was maybe the toughest quarter in a decade for advertisers. I think give us a lot of faith in Snap's ability to grow over a longer term period.
Lloyd, you reiterated your buy, you increased your price target. In light of those headwinds that John just mentioned, the fact that there isn't going to be so many different factors driving advertising in the third quarter, where is your optimism for the second half of the year?
Yeah, our optimism is really around the business on the direct response side, scaling up the S curve. The company has been investing in their ad tech stack for the last several years. We've heard great feedback from the ad community, and it's really starting to catch on with direct response advertisers. As we head into the fourth quarter, the business will index more towards e-commerce. The company has spent the last year developing more e-commerce focused ad tools. So we think they're really well positioned into the fourth quarter. And then stepping back over the longer term, the company has confronted an onslaught from Instagram, from TikTok, and they continue to grow users at a healthy clip, even if it's a little lower than what we had been expecting. They continue to grow time spent in their Discover unit. So they're doing a really good job executing. And so we think that this story is very much intact.
Hey, John, good morning. So I want to put these Snap results in the context of social media more broadly. And it strikes me that even though there's talk of this ad boycott, social media users certainly don't seem to be abandoning Facebook for Snap. Snap certainly doesn't seem to expect that to happen. And as long as that's not happening, are these results in a way bullish for Facebook investors anyway? Because it seems like the options are Facebook or nothing social media-wise for at least for most users and perhaps advertisers.
Yeah, that's a great question, John. No, we're bullish on Facebook in the short and long term, and I think that they, like Snap, will take share during this difficult period. But I think you kind of have to separate the user story from the advertising story. The boycott, I think, actually speaks to some bigger themes, which is during times of protest and other things happening in the world, brand advertisers have to pause their messaging to make sure what they're going to consumers with really resonates. And so we actually saw, I think, before the boycotts, Snap seemed to have felt it in its business, and Facebook probably will too. In June, there's just a week or so where advertisers really had to kind of pause everything and make sure that they had their creative where they needed it to be to give the right message. So I think the two are a little bit separate. I think social media during times like this can build a lot of awareness about what's happening around users, and that's why even during times where advertisers may not want to be as loud as they normally are, social media users get a lot of value from being on the platforms.
And so, Lloyd, along those same lines, when these boycotts or at least pullbacks from Facebook started getting announced, I was wondering, is this just a convenient time for a lot of advertisers to pull back on their budgets given what's happening more broadly? Or is this something that Facebook and Facebook investors specifically should be worried about? Given what we just heard from Snap, which of those, or maybe a third option, do you think it is?
Yeah, so when you look at Facebook, they probably have 20% of their business focused on brand, which is much lower than where Snap is. So they're more insulated. They've got an incredible direct response business. I think when you look at the brand side, there will be an impact in the second quarter, and that may extend into the third quarter with the boycott. But they have such a strong direct response business that we think the broader recovery theme at Facebook is on track. And to your question about are some advertisers just using this, we have heard in the ad community that some of the boycott is a quote unquote low cost win. They needed to cut their budgets anyway, so they would take a PR benefit of kind of participating in the boycott for something they had already planned to do anyway.